Hi, friends. How are you? So, as I told you, I'll be talking about some financial literacy, and as part of EmpoHer series program by WICCI Financial Literacy Management Council, I'm here today streaming live. So, this is all about know about borrowing and debt, financial literacy for career planning. I'm Dr. Himabindu, faculty of Usmania University, Hyderabad, and I'm a member of WICCI Telangana chapter. And today I'd be talking about know about borrowing and debt. So first of all, let me talk about the definition of borrowing and also debt. So we understand the basics, how borrowing and debts affect our career, our lives. That's what we are going to talk. So for what is meant by borrowing? So you want to borrow. First of all, what do you call as borrowing? So obtaining money or resources from another party will be called as borrowing. Who is another party? Anybody. Anybody other than you yourself will be other another party. So most likely it is out of the family. So not the own house, but the other members. So it requires paying back the amount over time. So once you borrow means you have to repay. You get it as a gift, you get it as remuneration, honorarium, as reward, incentive, that's all different. But you're taking something from somebody and you want to repay it over time, then it is termed as borrowing. This can be a formal borrowing, which can be loans or from credit cards or maybe some hand loans, the informal way from the friends, from the family, etc. So this can happen at any stage of your life. And what is debt? So debt will be the money which you owe to a lender. It includes the principal borrowed and also plus interest. So what is principal and interest? So if you're taking it in the informal way and it's from your close friends, and sometimes they do not ask for any interest. But even if you're taking in an informal way, there are few people who will ask you for interest over the money. It can be in percentages or it can be in rupees. Sometimes 2 rupees, 3 rupees, 5 rupees, 10 rupees, or they might say 12%, 14%, 15%, 24%, etc. So this debt can be a secured debt and also unsecured debt. So when you are taking or you're borrowing, how much money you owe to the other person will be your debt. So whether the principal and interest, everything is calculated while you're repaying it, that has to be checked out. So slowly I'll tell you about that. Well, let's talk about that as well. So what are the types of debts? So we have secure debt, I told you. So secure debt, for example, mortgage. We mortgage a house. So our house or car or any other belongings, maybe the tangible properties, the intangible properties, sometimes we mortgage them and we get some money. The auto loans, I told you about cars. You can have any other automobile as well, like the heavy vehicles or any other vehicles which you can put as surety and get some money. You can have unsecured debts which do not mortgage your properties. For example, credit cards and other personal loans. And there is also revolving debt, there is installment debt. So you have to think over what kind of debt I'm taking, whether this debt is being taken from one place and then transferred to the other place and then coming to me and then me giving to somebody else, or am I repaying it in installments, am I getting the money in installments? So all these factors have to be considered while you borrow or take debts. So there are always pros and cons of anything. For any activity you do, there is always pros and cons. And for borrowing also there are pros and cons. See, when as human beings we always may need help, and the help can be in of any form, and many a times it can be a financial help. So the financial help can come to certain people in the way of borrowing only. And the pros will be access to funds. So whatever funds are reserved in some place, maybe it might be with the bank, it might be with a money lender, it might be with a financial company. So those companies or those banks or whatever we are interested in, the funds are available with them and we have access to their funds. It can help us to build a credit history. So why credit history? You borrow and then you repay, you'll have a good credit score. That's what we check with the CBIL score, right? So this helps in achieving big purchases as well. What's a big purchase? Example, you want to buy a flat, a villa. It will cost you more than 1 crore, for example, around 1.5 crores. Or you go for a bit luxurious one, maybe 3 crores, 3.5 crores. And then we as employees, many people as employees, they cannot afford to pay that much amount at a time. So what to do? That's a very big purchase. That might be the entire income for somebody in their whole life. So to achieve such big purchases, borrowing can help us. So we take a house loan, we take some kind of loan. Maybe we have already saved a lot of money and we are falling short of some money. Then borrowing helps us to make such big purchases. Okay, this is all good. We go with installments, we take credit card installments, we purchase few things on EMI sometimes. Everything is good. But is there any con about it? Is there anything like disadvantage about it? This is what we are going to ask. So what can be the disadvantage? The disadvantage can be the interest cost. What is interest on any amount of money you take? So there is a percentage of interest. So the percentage of interest will be told to you initially. So in the beginning itself, somebody will let you know how much percentage of interest is going to be charged. We know it already. So as learned people, the first thing what you have to check will be the interest amount. How much interest am I going to pay at the end? What's my repaying amount? This is what we have to check. So interest cost, it might be a little more. Sometimes they do not let us understand how much interest is going. So if you're not financially well aware, you don't know. They'll say, instead of saying 50 paise or like 1 rupee or 2 rupees, they might tell you it is 10 percentage, 12 percentage, something like that, which you might not be aware. You might not be able to calculate what is the exact amount based on the percentage. So then that will hit your pocket. Then risk of default. So if you're not repaying it in time, suppose the EMIs are not made on time, so then you might become a defaulter. So if you are becoming a defaulter, your CIBIL score will drop down, and also legally the other person may file a suit against you. He might take some action against you. That also becomes a problem. So it impacts our credit score anyway. If your credit score is being impacted, you will not get further loans. So you want to go for furthermore big purchases or additional purchases sometimes, or you require a loan in some other time. Then they will check for your credit score. They'll see that your credit score is low. So that low credit score will not give you any loan. Also, if they are giving you a loan, they'll give you very less amount of loan. So this is also another con with borrowing. So I would like to share some borrowing tips with you. So we know what are the pros, what are the cons. Then the tips will be like, you have to borrow only what you need. Don't go for something extra. Everybody knows this. We know what we are. We know where we stand. We know how much we can repay. We know our capacity. But yet, everybody thinks we have to dream big. Or at that instant of time, the bigger thing or the bigger budget thing, it might be a property, it might be an article, that might be luring, that might be so interesting, we might feel now or never, so we have to get it now. Or sometimes we may think the other item, article, or a property is coming at a lesser price than before, so why not grab the opportunity? But we forget that this is beyond our budget, where we cannot repay, that we have to think. So think before borrowing very well. Not just think, you have to plan. You have to plan, talk to your family, talk to your spouses, talk to your friends, or take advice from experienced people, and then decide how much should I borrow. Also, borrow only when you're needing it. If you're not needing it, absolutely no, don't borrow. Then you have to understand the terms and interest rates. So before you agree for borrowing, you have to understand it. You cannot say, I don't know how much interest they have taken. I don't know how much I was charged. So this cannot happen. You cannot say, no, I'm not aware. I don't know. I was not told. All this cannot be accepted because you are the one responsible for what's happening, what's going on. You cannot say that no, this person did not tell me in the beginning, I was not aware of what's happening with the interest, or I was not aware that I should be repaying this much, I was not aware that this will be this much hard. So first, the terms, how much interest rate is being imposed on you, what are the terms and conditions for repaying, and then you have to make payments on time. So that's like a thumb rule. You cannot violate it. As I told you, if you're not making the payments on time, what's happening? You're going to become a defaulter, and also your credit score is going to be less. Also, if you think um, like there is some option where you can escape this, it's always good, it's always good that that you just skip it. You don't need to borrow unless you think it is necessary. You don't do it. That's always the best thing. But what people do, they just go into some kind of temptation. They'll think, okay, let me try. And sometimes there will be people beside you who will be telling you, who will be prompting you, it's okay, it's okay, it's okay, you do it, no worries, we'll see it later. The later thing will not work. So at that instant you have to check what's going. So you have to keep debt levels manageable as well. So you have to see, if you are taking one debt now, you have borrowed something, you are in the process of making repayment, you'll have to check, if I'm taking a new thing, if I'm going to borrow something new, is it manageable, am I going to repay? You have to check with that, certainly. So this thing comes with the proper planning. How much will you plan? You have to plan, because after all, we are the ones who are going to repay it. We know the hardships, we know how much we are going to earn, we know how much we are going to spend, and we know how much burden is it is going to be on our pockets if we are taking some loans. So the debt levels should be manageable. They cannot go uncontrolled. You cannot think you will do one, take another loan, repay this, take another loan, repay this. You might be seeing several advertisements, where people ask you to take loans. Yes, we are ready to give you this, we are ready to give you that. But how about repayment? Who will repay all that? And how much can we repay? This is what we have to check. If you have seen in the news, in newspaper or in any news, there are few people who commit suicides because they cannot repay the debts. Several times it so happens that these people take more and more loans which are out of their budget. They do not plan, they don't know how much they are taking and how much they are going to repay. And someday the interest becomes so huge that they cannot afford to listen to others calling them defaulters or abusing them or harassing them for money. So if all that happens, they don't know how to handle it and they commit suicides because of the loans. So always we have to keep our debt levels manageable so that this doesn't happen. And I'll have to tell you about financial literacy, and which is useful for career planning. Why financial literacy, and is it linked to what we have spoken until now? So I was telling about borrowing and debts, how much you have to borrow and how much debt should be there, how much you are repaying, etc. But knowing all this is called as financial literacy, and that will be one of the solutions for our borrowing and debts. So the definition will be: financial literacy is essential for effective career planning as it empowers individuals to make informed decisions about their financial well being in relation to their professional lives. It's not just about managing money, it's about understanding how financial decisions impact career choices and long term financial securities. So, it's just not managing money, but it's also telling you how your decisions, how your present current decisions are going to impact your long term financial security. So while I talk about this, ladies and gents, whoever is watching this live, I would like to tell you this: financial literacy and also financial management is very useful for the youngsters who recently joined the jobs or who are ready to start their careers as employees or maybe entrepreneurs or homemakers. If even if they are self-employed, they'll have to have financial literacy, because in the initial stages you don't know how much is coming in, how much you're spending